everyone, I'm Monica from Totally About Houses, and today we're diving into a topic that stops a lot of people from even trying to buy a home: bad credit. Maybe you've been told you can't buy a house because your credit score is too low, or maybe you're nervous and you even check your score because you're afraid of what you'll find. Well, here's the truth. Having bad credit doesn't mean homeownership is impossible. It just means you need to plan carefully, understand your options, and take a few extra steps before diving in. In the next 12 minutes, I'll walk you through everything you need to know before you start house hunting, from how credit impacts your loan, to ways you can improve your approval chances, to the specific programs designed to help people just like you. So grab a notebook and let's break this down together. So step one, understanding what bad credit actually means. Let's start by clearing something up. What does bad credit actually mean? Credit scores typically range from 300 to 850. A score above 740 is considered excellent. 700 to 739 is good. 620 to 699 is fair. Anything below 620 is generally viewed as poor or subprime. Now, that doesn't mean you can't buy a house if you're below 620. Not at all. But it does mean lenders see you as a higher risk. So you'll need to show them you're serious, stable, and ready to handle a mortgage responsibly. Your credit score affects three major things: whether you qualify for a loan, how much you'll pay in interest, and how much down payment you'll need. So the lower your score, the higher your interest rate tends to be. But again, that's not the end of the story. Step two, know where you stand. Before you do anything else, find out exactly what your credit score is and what's on your report. You can get a free credit report and a copy of it from each of the three major bureaus, Experian, Equifax, and TransUnion, once per year at annualcreditreport.com. When you get it, don't panic if you see mistakes or old accounts. That's more common than you think. Go line by line and make sure everything is accurate. If there's a collection that's been paid but still showing open, dispute it. If there's something incorrect, get it fixed. Even small corrections can raise your score 10 to 30 points, and it can make a big difference in a loan approval. Step three, understand what lenders are looking for. Credit score isn't the only thing lenders care about. They also look at your debt to income ratio. That's how much your monthly income goes towards debt like credit cards, car loans, and student loans. They'll check your employment history, your savings, and how long you've had steady income. Even with bad credit, strong income and low debt can balance things out. In other words, lenders want to know, can this person make their payments every month without falling behind? So as your credit score isn't great, your job is to show financial stability in other ways. This could mean consistent pay stubs, a bigger down payment, or proof of on-time rent payments for the past year. All of these show responsibility, and responsibility often outweighs the number. Step four, explore loan options for buyers with bad credit. Here's the good news. There are loan programs designed to help buyers with imperfect credit. Let's talk about the big three. FHA loan. These are backed by the Federal Housing Administration and are one of the most common paths for buyers with lower credit. You can qualify with a credit score as low as 580 and with 3.5% down. Even scores between 500 and 579 can sometimes qualify with a 10% down payment. FHA loans are more forgiving when it comes to past financial mistakes, like collections or short sales. VA loans. If you're a veteran, active duty military, or spouse of one, you may qualify for a VA loan. There's no minimum credit score required by the VA, though most lenders look for a 580 to 620 or better. These loans also have no down payment and no private mortgage insurance, a huge advantage and a great loan. USDA loans. For homes in eligible rural areas, the USDA loan offers zero down payment, flexible credit requirements, usually around 640. Each of these options help people who might not fit traditional molds. Again, this is a great opportunity to educate clients who think they're locked out of home ownership. Step five, save for a bigger down payment. If your credit isn't perfect, one of the best ways to offset risk in a lender's eyes is a larger down payment. Here's why. It lowers the amount you borrow, which means less risk for the lender and more equity for you. Even an extra 2 to 3% down can improve your loan terms, and in some cases, make approval possible when it otherwise wouldn't be. Let's say you're eyeing a $200,000 home. Instead of a 3.5% down, try saving close to 5 to 10%. The extra buffer gives lenders confidence that you're serious and financially prepared. Plus, a larger down payment means a smaller monthly payment, which helps you budget and your stress levels long term. Step 6, clean up your credit before applying. Now let's talk strategy. Improving your credit score before you apply. Now, you don't need perfect credit to buy a house, but improving it can slightly can save you thousands of dollars. Here's what to do. Pay down credit card balances below 30% of their limit. Don't open new credit accounts right before applying. Set up auto pay for every bill. Late payments hurt your score fast. And dispute any errors on your credit report immediately. Even 3 months of consistent on-time payments can boost your score significantly. And if you're feeling overwhelmed, consider talking to a credit counselor. Many nonprofits offer free or low-cost help to create a game plan. Remember, progress, not perfection. Lenders want to see consistency more than they want to see a perfect number. Step 7, get pre-approved early. One of the biggest mistakes buyers with bad credit make is waiting too long to talk to a lender. Don't wait until you find the home you love. Talk to a lender and a great real estate agent before you start house hunting. A pre-approval does 2 things. 1, it shows you exactly where you stand, and 2, it gives you a realistic price range so you don't waste time on homes outside your reach. Lenders can also tell you which programs you might qualify for, and sometimes even connect you with credit repair sources. We have some great things for that. Pre-approval doesn't lock you in, it just gives you a roadmap. Step 8, consider working with a mortgage broker. If you have less than perfect credit, working with a mortgage broker can be a smart move. Unlike traditional banks that offer unlimited loan types, brokers have access to multiple lenders, some of which specialize in working with lower credit profiles. They can shop around for you, compare rates, and find the best fit for your situation. Just make sure you ask questions like, do you work with buyers who have a credit score below 620? What loan programs do you recommend for my score range? A good mortgage broker acts like your advocate, not just a salesperson, and we have some good ones. Step 9, budget for higher cost. Now, we need to be realistic. If your credit is low, your interest rates may be higher, and that affects your monthly payment. Let's say 2 buyers each get a $250,000 loan. Buyer A has excellent credit and gets a 6% rate. Buyer B has fair credit and gets a 7.5% rate. The difference is around $250 per month or $3,000 per year. So plan for that. Adjust your home search accordingly, and remember, you can always refinance later once your credit improves. Don't let today's rate discourage you. Your goal right now is to get your foot in the door of home ownership. Step 10, avoid common mistakes. Let's talk about what not to do. 1, don't make large purchases before or during your loan approval. That new car or furniture set can kill your debt to income and lower your score. 2, don't switch jobs mid-process unless it's unavoidable. Lenders love stability. And don't ignore collection accounts. Make sure you pay them off or have a plan. Step 4, don't apply for too many credit cards at once. Each inquiry slightly drops your score. Those small missteps can delay or derail your approval, so stay focused and disciplined through the process. Now, step 11, have realistic expectations. If your credit score isn't perfect, you may not get your dream home right away, and that's okay. Start with something affordable. Build equity, make payments on time, and in a few years you can upgrade to something better or refinance into a better rate. Think of your first home as your foundation, not your finish line. Every mortgage payment you make helps you rebuild your credit, and before you know it, you'll be in a position to choose, not chase. Step 12, partner with the right real estate agent. Your real estate agent matters more than you think. You want someone who understands your financial position, connects with you with the right lenders, and helps you find homes that fit your approval range. An experienced agent can save you time from wasting time on listings that won't pass appraisal or meet loan guidelines. And more importantly, they'll have your back during negotiations, making sure you're not overpaying or getting discouraged. If you're not sure where to start, talk to agents who regularly work with first-time homebuyers or FHA clients. They'll know the ins and outs of the process, like To Live at Houses agents. So let's wrap this up. Buying a home with bad credit isn't impossible. It just takes knowledge, preparation, and patience. Know your score, fix errors, and clean up your debts. Save for a solid down payment, explore FHA, VA, or USDA options, get pre-approved early, stay disciplined with your finances. The road may feel a little longer, but every step you take is a step closer to stability, equity, and independence. If you found this helpful, give this video a like, share it with someone thinking about buying, and subscribe for more real estate tips and advice. I'm Monica Dunlap from Totally About Houses, helping you make confident moves, even when the credit score isn't perfect. Thanks for watching, and I'll see you in the next one.